Hey everybody, it's Chris Tyler of Options Cat Stock Trading. It's Tuesday after the market close, and a bit of March Madness was the game being played on Wall Street today. Majors finished down roughly 2/3 of 8% to about 1.75% in the red. Selling pressure was most evident in the NAS, and not surprisingly, many higher beta, smaller cap tech stocks tumbled to much larger percentage declines than the broader averages. It's against this backdrop that we'll point out that last week's elevated and fearful volatility readings in the VIX, which nearly touched 30% 2 days in a row, combined with the market's rally attempt, continue to set up the possibility for a meaningful intermediate low out of the current correction. That is, if a high-powered thrust session known as a follow-through day or FTD signals this week. With that optimism in mind, let's take a look at one stock outlier that's in the news this week. It's wildly popular as a theme name, sports a higher beta, has demonstrated amazing relative strength of late, and in our view, deserves a place on collar traders' watch lists for buying. So on the screen is a weekly chart of D-Wave quantum shares, ticker QBTS. We can see that beginning in late October to early November, bullish investors begin to take notice of D-Wave stock. At that time, volume begins to build aggressively into the tens of millions per week. Simultaneously, shares of QBTS start their ascent higher from the cheap seats of around $1 and a small cap valuation of less than $400 million. By early January, D-Wave shares have gained roughly 1,000%, sport a price tag of almost $11.50 at their intermediate high, and boast a mid-cap market capitalization north of $3 billion. As we can also see, those aggressive inflows into QBTS didn't last. Enter NVIDIA. The AI chip giant CEO, Jensen Huang, famously stated that practical quantum computing is still about 2 decades away in early January. Those comments single-handedly pulled the carpet out from quantum stocks after their massive run-ups. Ironically and importantly, NVIDIA has still set aside a quantum day at an investor conference it's holding this week. That save-the-date event for quantum investors is Thursday. And technically, if we're to believe time is to heal most wounds, D-Wave's very deep NVIDIA-induced correction of almost 70% has gone on to form a bullish cup or W-type price pattern. That's not all. Also a positive for bullish investors in QBTS, the stock has for the first time taken leadership in a group of names that includes RGTI, QUBT, as well as IONQ, which was discussed in a video on this channel a couple days ago. Lastly, and of even greater benefit to momentum traders, QBTS is the first quantum name to have made fresh intermediate highs. Moreover, the rally strength has left its peers, relatively speaking, in the dust. Given D-Wave's position on the chart, obvious risk, but also potential reward as a momentum stock, I like QBTS as a fully hedged collar spread. This price structure can be managed over time to trade a bullish trend that continues to show strength for additional profits to the collar investor. There's a second key advantage with this spread over simply owning stock as well. The collar can even be used to accumulate additional shares at little to no cost by making adjustments to the hedge if another larger and similar correction enters the QBTS price chart. Without making a recommendation, as only your spouse, broker, priest, or other personal influencer can do that for you, the April 11/17 collar is shown using Tuesday's closing prices. This collar's design takes advantage of further momentum, but also vastly minimizes losses on the downside, as we can see from the risk chart. In turn, this allows investors to participate more smartly as bulls at discounted stock prices in QBTS, That is, if the Bears decide to get off the bench and do another full court press.